All right, what's going on, everyone? Jamie Saettele here with the Midweek Strategy webinar for SB Trade Desk. It is March 9th, 2016, and as I say that date out loud, I realize that it's one of my sister's birthdays. Of course, I have a lot of sisters, a big brood, so there seems to be a birthday just about every month, but I'm glad I thought of that so I can call her later. All right, so let's dive in. I've got basically six main topics that we're going to look at today. I want to start by looking at the S&P 500. And then crude oil, kind of like, the macro charts, if you will. Just real quick, before I kind of jump into everything, would you just let me know quickly that you guys can hear me, just to get, so I don't start rambling off into to no one. Okay, great. AV is good, I'm told. AV is good. AV. Okay, super. All right, so put out a few charts here on Twitter today, and S&P 500. So here's the SPX 500, right? This is our CFD. So again, if you're a futures trader, the prices will be slightly different, but not a whole lot. Again, what we're doing here, we're looking at, first of all, the slope lines. Okay, fine, that's great. Helping us identify support resistance. Remember, the big deal for me and for the market, I think, was that when the S&Ps went through the sliding parallels, I had them marked as red before because I was expecting them to basically act as decent resistance for us to come off a little bit. We did come off on the 26th, and it was a pretty, it was a decent size sell-off, right? 1970s down into what, the 1920s. So like a 50-handle move, then obviously broke through, and now we're in that grind, so to speak. So a couple things from here. The move from the low on February 11th is actually unfolding in at this point, it's fairly clean as far as the wave count's concerned. You've got an impulse wave up, a move down, wave B probably, 1, 2, 3 into the highs here on the 4th. That was on Friday after NFPs. And then what we've got since then is obviously this sideways trading, sideways grind, which itself suggests that you're in some sort of a fourth wave. That's the character of a fourth wave, okay? Now, fourth waves oftentimes flat or triangles. I don't think that this fourth wave is done. I think it could last actually maybe the rest of the week, to be quite honest. You could end up with some really nasty price action, as fourth waves often do. In other words, you could go into the highs and then sell off again, have something like an A, B, C. Okay, I'm just throwing out possibilities at this point. I myself don't care too much about the specifics of, say, what the market does, whether it goes here first or here. My points of reference for trading and kind of entering a risk on or risk off type of atmosphere are basically going to be 1968, okay, maybe 1965, but mid 19 high 1960s for the fourth wave low, and into up here you get the fifth wave high and ultimately wave C, and that 2029 figure, okay, it's 2028 in futures, but 2029 is where you get two equal waves from the low, all right, from the 211 low. So I would kind of mark those down, 1965 to 68 for support, 2029 or so, maybe slightly higher for resistance, okay? That's what I'm looking at for those. There appear to be some horizontal lows over there because I've got lines drawn, so let's see what they are. You've got 2023 is actually the high from September 2014, and last March low actually is interesting. So the March low from 2015 is actually 2040. So it's a wide zone of 2023 to 2040 for some sort of a top, okay? All right, now let's look at, we're going to look at some crude oil. So obviously the chart that would put up, and what I'm going to do, let me draw everything with you so that you can first see it's better, I think, it's a better way to kind of see it um, if I just draw it first. So, okay, here's crude. Crude's broken out to the upside. I do think, or I am of the mind that the lows down here, could be it as far as the multi-year bear market in crude oil is concerned. There isn't a wave count to, go basically 1, 2, 3, 4. This is a fourth, and then you're going to another low in 5. Either way, the bulk of the move is over clearly, and what we're looking at here is basically getting bearish because we've come into resistance. Okay, we had a very sharp response from more or less the exact point of resistance the other day, and there's so much up here. So you've got, okay, here's the slope that we work with, okay, that has been so useful. So off here, this was basically support, turned resistance, and really the breakout level, okay? It's my contention that this line, this exact one right here, will probably end up being, it's in bold now, will probably end up being support again at some point down the road, okay? So I would kind of mark that down on the chart. Okay, then you've got this one, which again, pretty good resistance, right? On our way into really the final lows. This was right where we started the year, in fact, up here January 4th, first trading day of the year, and really sold off hard from that level. Okay, so we've come back to that line, obviously not the horizontal level, but we've come back to that line as resistance. All right, so you've got that going as far as resistance is concerned right here. There's just a simple trend line here, okay, as well. All right, so we got that going for us as well. You do have, as mentioned, the horizontal level here, which is the low from December, okay? So that is 38.48, and the high so far is something like 38.42. What is it? 38.39, okay? And we just poked up to 38.19 actually this morning and have come off a little bit. Okay, so there's solid resistance from all those levels. And then finally, you've got a new bullish structure. There's actually a couple. Okay, there's one that's very steep that probably is not going to last all that much longer. And then this is probably the big useful one. Median line, et cetera, lower parallel. Again, the ideal support for this probably eventually is down here, and it's close to 34 bucks. It's actually right at 34 bucks, and that's on the 15th, mid-month. Mid-month, if you look over the last few years, there's been a big tendency for the market to turn mid-month. So like whichever way you're going into mid-month, oftentimes you can get a sense that that might be a reversal. In fact, some of the bigger turns we've had, October highs in crude mid-month, February lows mid-month. So yeah, I'd be looking for weakness into basically from here, obviously allowing for crude to run stops or whatever it wants to do, but looking for weakness into this level down here towards 34. Okay. And with this thing moving the way it does, it could be, you could spend time up here, do nothing, and then slam down into it later at some point next week. All right, so that's what we've got with crude. I did say there was one other really steep slope that probably isn't going to last that much longer. You can actually see crude turning off a little bit just now, in fact. And that's this one right here. So we identified this one not that long ago, maybe it might have been earlier this week or late last week. And you can see how steep this thing is, right? I mean, you've never even really hit the median line. It just keeps riding on this thing here. Actually, it might be more over here. Yeah. So it just keeps riding this. Eventually, this will give way, and we'll get the bigger move down to 34 before we go higher. All right. So that's crude, and the reason, obviously, to spend so much time on crude these days, as you know, the market's moving so much, and it's kind of the central driving force, it seems like, between for risk at this point. You can see the moves in risk and in crude much easier than you can see them in the S&P right now. The S&P being in a fourth wave, the S&P getting up towards the top of its range and the end of its kind of short-term cycle. And when that happens, as you well know, the stock market gets very low. The volatility decreases significantly, and it's more difficult, in my opinion, to see the emotion, which is to see the patterns in prices. So, with crude responding to its support resistance and everything, I think this is a good spot to focus on that. And of course, we've got dollar CAD, right, which I think is coming into a bigger low. I'll get to that. We did have, I thought, what was a great setup this morning to buy into 33, 30, 40, what have you, and then look for a bigger move to the upside. Did not materialize, but let's see. Let's see what, if we're getting we just got actually a divergence signal. So I'm getting a divergence signal here on dollar CAD right now. Actually, a 4-hour chart. 4-hour just closed at 1 p.m. Last one was here. Ended up being a very short-term low. Got one here on February 1st, which was a pretty good low. And then before that, they were short-term tops within this bull market. Okay, you can see oftentimes they will give way to at least a dip, sometimes a bigger dip, sometimes a bigger top, sometimes they don't work at all. So it's not like a signal that I would necessarily want to use unless you're willing to kind of gamble a little bit more, but you don't really have a level to trade against in these instances. Anyway, we'll get to dollar CAD in a second. I want to look at some other stuff real quick. All right. Aussie. Let's look at Aussie real fast. Okay, so Aussie dollar. All right, so here's the chart from the weekend. Aussie is obviously so we finished. This was Friday, right here. Yesterday and today. Really, today is, you would qualify as kind of breaking resistance at this point. So what you're going to look at from here, like for the rest of the week, is so this line, which was, again, this was the big resistance last May, and last Friday's high is 74.42. That to me is actually support now. Okay, so 74.42 is support. It's former resistance on a long-term basis. It's also Friday's high, which, former resistance on a short-term basis. So 74.42 is basically support to look on the long side against the highs, or the lows, excuse me, from yesterday or today, so like 74.05. Levels for resistance, we're kind of getting into them now, right? You can see the former floor that you had last year. Okay, we've actually already, have we gotten into it yet? 75.32, just pips from there. So today's high is 75.27. 75.32 up to about 76 really is the floor, former support, and that was 75.97, 76 is basically the lows from last June, and then July, and that was before, of course, things really fell apart, going into the lows. So that's what we're looking at as far as kind of the next ceiling. Really close, obviously, 75.32 to roughly 76. Trading focus on the breakout it does remain higher at this point, and 74.42 again is the support now. So with things getting kind of stretched up here, be picky on entries. Obviously, 74.42 would be a place that I might issue along with a stop below 74 in order to get that final stretch potentially into 76. At which point you might want to think about a short. But we'll see how that plays out. Look at the short-term chart real quickly, and so here is there's Friday's high right there. Okay, 74.42. So again, you're looking for that level to provide support at this point. Okay, horizontal basis, looking for support. Dollar CAD, let's look there. Okay, so we're in the form of congestion. Why did I think that there was a low in place? Well, basically, you had a turn up in a pretty sharp manner from the December low. So congestion really from last November to December, this whole area before the move higher and really what was a blow off top was 132.20 basically to 132.90. And that area is your zone for support if you're going to turn up now. If you don't, really the next spot is probably about this area right here, which is 131. So it's really not that far away. You can see it cleaner on a weekly chart, and that's this slope here. So all this is the trend line that really crosses from 2012 lows up through 2014. Okay, extend the parallel off of the high in 2014. It ended up as literally precise support last May. And then the same parallel from the high back here in August cut through all this. So, thinking there's nothing there, but it ended up being support in October before we had the big move higher. Okay, so that level again is about 131 this week and next. And, give or take, some overthrow, if you will, the 2009 high is 130.60. Okay, so if thinking that maybe that there's like a multi-year top up here, and I think you do have to think like that, given the weekly reversal that we had at that point. Oh, and this monthly bar, okay, at a pretty good long-term price level, right? I mean, give or take, but good level. So, eventually we could be trading a lot lower. But, as far as multi-week is concerned, we're down 7 weeks in a row. That's extremely rare. It's only happened a few times in history. So, my focus is on trading for a low, whether that is here, which is in this 32-20-90 zone, or whether it's closer to 130.60, 131, which is the next level. We'll wait and see, but we'll, hope should get that soon. But we've got that, and we've also obviously, as mentioned, got crude oil into just a really, really big level. So I'm all about looking for, longs reward to risk at this point is on the upside for me. And here's another way, if you look at here, let's go to weekly chart again. Sometimes you can really get a sense for good price levels, obviously, by looking at just the weeklies. Like this level here, it's subtle, but you had little pivots here, right? August, early August high at 32.12, right? And then kind of support in November, 32.20. Okay, there's a lot of trading around there. Okay, so pay attention as dollar CAD comes into this, gets closer to 32. Okay, 1, 2, 3, 4, 5, 6, 7. This would be 8 weeks. Let's see if we have any consecutive declines of 8 weeks. I'm sure we do. They're probably like in here somewhere. Eight weeks, if this was week 8. So you got to go, here was 9 in 96. Down here it kept going in 91. This was a low in 90. This was the middle of a major bear trend. And then the all-time low ended up stretching for 10 weeks before we ripped higher. This is obviously, none of those scenarios are like this because we're coming off of major highs. We're not, these were like blow off, bottoms, right? Big reversals. We're talking about here. This was kind of in the confines of a correction. This is in the middle of a trend, 1988, and the high was 2 years earlier and these were down towards price lows at the end of downtrends. This is probably the closest one that you've got right here in 1982. Ended up going down for 8 weeks, got a very small bounce, and then pretty much nothing happened. Drifted lower and then sideways. So interesting, like little stat there though, as far as the moves into 8 weeks in a row. But yeah, my opinion hasn't changed as far as I'm not in the trade at this point. I want to be in the trade. I think dollar CAD's going higher, whether it's from here or 130.60, 131. I don't know, but I think we'll get up into the breakdown level at some point, which is really 136.38 to 138.16, which of course is also the year open. So at this point, you're talking 400 to 600 pips higher on dollar CAD, with maybe downside risk to 131, 150 pips lower. I think we're on the right idea as far as looking on the upside for dollar CAD. Okay, so let's move on. Euro dollar, dollar Swiss, dollar yen are next. So it's been like hanging on to a bucking bronco as far as this euro dollar is concerned. We've held up, even every time we trade up into resistance, which really we've traded into resistance every day this week and Friday, right? This was Friday right here, and we were fortunate enough to get a good entry on that long position for what I think is the triangle, right? And this is the where people get like really annoyed with Elliott wave stuff. Is they're like, well, you're saying that it could be, A, B, C, D, E. You're saying we could be in an E wave and then, and then fail and go lower, or you're saying this could be wave D, okay, of a bullish triangle. In other words, this is larger A, and this is, A, B, C, D, and then you have a little decline in wave E of B. And I understand the criticisms because I have them too, but excuse me. But you have to remember, Elliott's really an analysis tool. It's not going to tell you the future, okay? And in this case, both counts really point to the upside anyway, okay? So, there's a few things to understand here to take away from this. One, you're in a triangle leg, so it's going to be choppy. Well, we expect that, and that's what we've got. Two, you're going to get little fits and starts, right? So we've come in, we've pulled off, we've come in, we've pulled off. Triangle legs are corrective patterns, or when you get like the news events that you get is when you kind of, you get news into tops and news into bottoms, right? That's when fading the news is a good strategy. Like if you try to fade the news in a trend all the time, it's not going to work, okay? Like this morning, I thought dollar CAD had entered a more of a corrective period due to the level we came in and the turn higher and the crude oil and all that stuff. So I was looking for more of a kind of an atmosphere where news would be faded and BOC came out. I was looking for that weakness to actually be retraced. Obviously, it wasn't. And then the crude inventories came out and crude popped higher even more. Doesn't change the fact that we're at resistance, but whatever. So here's euro. And, focus is still higher towards 1180, 1250. I do want to look at the short-term chart, though, and show you that I do think the market could eventually fail. So if we look at this, as kind of 1, 2, 3, 4, 5, and this is NFP, right? NFP kind of being the fifth wave itself, okay? Um, so you've got an impulse here. This is probably just wave A, right? So A right here, really A. And then what you've got here is probably A, B, probably C as a flat, or you could get a triangle, okay, um, and have a dip into maybe 109.85, which is the week open, before you bust up a little higher tomorrow. So what I'm looking for tomorrow is actually with ECB, I'm looking for euro to trade higher, but I'm looking for the rally to fail. Okay, and the target I had is like 111.80. I'm probably going to amend that. Hey Amir, what's going on, man? Have not gone through gold. I absolutely will go through gold in a second here. Okay, I just got some pre-topics that I want to get through. Okay, as far as the currencies are concerned. So what we've got here is could have a completed correction here at the low today at 109.45. And the implication is that eventually you break up out of this, and with ECB tomorrow, it's a perfect time for it. And two equal legs gets you 111.63. Okay, that's an interesting price because the 61.8 of the decline is actually 111.65. So while I think that euro could go higher into 12.50 or even 13.10 for that matter, I would be looking at, kind of getting out of this long at 11.60, 11.65 or whatever tomorrow, especially if the rally is up on ECB and you fail up there. So we'll, talk about or put that in the swing update tonight. Tim Hellberg, we'll look at pound kiwi, sure. No problem, my friend. So yeah, so for ECB tomorrow, as you head into tomorrow, this is it. It's this simple right here. 109.85. Okay, kind of look for support there heading into tomorrow's meeting with ECB, and 11.60s is more or less the level to get out as far as I'm concerned. Okay. Because you could then fail and drift lower after that. You'd have two equal legs up. You'd have the 61.8 of the decline. Okay, and understanding that you are in a triangle, you do tend to get exhaustion on news. So that's how I'm looking at euro heading into tomorrow. Okay, dollar Swiss, as had noted in the crude coming off a little bit here again. Was up 38.19 earlier, now 37.60. Resistance proving all right. Looking at, where were we? Dollar Swiss, obviously, directly related, of course, with our euro dollar. Again, longer term, this thing eventually is going to break out to the upside and go berserk. Okay, near term, and understanding that this dollar move, there's potential for a serious breakdown, but there's always plenty of possibilities, and one of them is a total fake out. Dollar Swiss I'm glad I haven't tried to trade it because it's been pure hell right here. And tomorrow or the next day or whatever, but especially tomorrow, obviously, because it's ECB, if dollar Swiss comes off hard and you get down into support, which I have is about 97.70, 97.90, okay? And again, that level is weekly reversal support, okay? It's also the low from December. It's also the 61.8 of this move up. So 98.03 is this is the 61.8, 97.90 of this move here. Okay, the move up into February 22nd, which is kind of the impulsive move. Everything from here is a disaster, a correction. But if dollar Swiss were to come off, US dollar were to come off, just kind of across the board, especially against European currencies like euro and Swiss and maybe pound, but euro trades up on ECB and dollar Swiss trades down. Again, I'll be looking for watching dollar Swiss closely to see if there's support down here at 97.70.90, because if there is, and you rebound off this level, it could be that the dollar move that we're seeing right now actually ends up as something is like a trap, okay? And that we don't get a clean breakdown and multi-month move lower, and we actually drift higher for a little bit, and then uh, try to top closer towards the end of April, or sorry, the end of this month, the end of March. Okay, the seasonality would kind of bear that out too. Again, with dollar seasonality, it tops in March, but it doesn't really accelerate weakness until April. And do I have that? Let's see. Here's what I'm talking about as far as that's concerned. So here's the dollar seasonality, as you can see. Okay, this big seasonal top, like the major ones, like 20-year, 10-year, or up here, even 5-year, which is interesting because it's been in a bull market for 5 years. 15-year top's actually the end of the month, but you don't get substantial weakness, or you don't tend to get substantial weakness until April. Okay, so this is monthly, month by month on the histogram, and you can see that every single look back period, 30 years, 20 years, 10 years, 15 years, 10 years, 5 years, are all for April. April is historically the worst month of the year for the dollar. Okay, May is historically one of the best. May is actually one of the worst month of the year for euro. So, the big seasonal components, April and May coming up, are pretty interesting, especially in light of what's happening, right now with the euro dollar triangle and consolidation and whatnot. And that's why I think, why my major preferred count, if you will, is actually this is higher in wave D, then lower in wave E into the end of this month, and then we're going to get an explosion to the upside in the euro around April, and into a May top would be a preferred scenario. Okay, so that's euro and dollar Swiss. Dollar yen, the levels here have been playing out really well. We did, again, no longer looking at the diagonal possibility, but again, this is probably a triangle now. So A, B, C, D. Remember, 112.16 to 112.42, those two levels specifically were the support levels, and today's low is like 112.22. You do have a you do have a 4-hour reversal down here. Okay, so the close of that bar is support. Actually happens to be a low and a high anyway over the last few days. So that would be 112.74. So 112.74 is actually support in order to buy it up into probably, again, 113.88 to 114.09 for, the next top. Okay. Here's the 60-minute chart. So, if you get a dip overnight at all, 112.74 would be your support area. 113.88, 114.09 resistance. Okay. And of course, that brings us to, I guess, euro yen, and totally sucks, I guess, but this is, I think we had the weekly reversal. I think long is the right trade. We'd have a pretty looking position at this point if it weren't, if we didn't drift lower overnight. We did, ended up bottoming at 6 in the morning, took out one, 123.20, which was our stop down here, unfortunately, and here we have euro yen. So we've got kind of a bottoming, head and shoulders going on here, and I still think we head up into 127 plus. if I put a dollar yen position in tonight, it'll just be basically end up being long euro dollar and long dollar yen together. So you basically be long euro yen. But I am looking higher. You actually could get support again at 123.90 in euro yen. Okay, but same idea. Okay, as far as euro yen's concerned. Um, let's look at Kiwi because RB&Z is coming up, and we'll look at a few Kiwi crosses. Okay, and then I'll look at gold for Amir here. Okay, and I'm sure everyone else would like to see gold as well. But let's take a look at Kiwi first. All right, so here's Kiwi on the intraday. Let's go to the daily first, actually. All right, so Kiwi basically came in looking at two levels for the week, right? 67 thereabouts and 69. And as you know, 69 is the high from October and the high from December. Okay, and you've also got this, bullish uptrend resistance there, if you will. It goes off the low here in November, crossed through highs, early February. Got some big reversals off that, but support basically hit today. 67.13 was a level we were looking at. 67.15 is the low today. So going into RB&Z, much like Aussie, having support at the high on Friday. This is last Thursday's high, and it's 67.55. And then the high from the 26 is 67.74. I'd be looking more at this high because it's in line with the median line, okay, which was resistance on the 26. So basically looking at support at about 67.55 for RB&Z, okay. As far as fading, strength here, you are coming up on the weekly. Let's see here. You are coming up on the yearly open, 68.27, and we've seen pretty good moves before off of yearly open prices. Just last year we had one we just failed right before it several times into April. But I'd be waiting for basically a run on probably 69, just kind of a stop run up into 69, if you will, in order to get short on Kiwi, barring some sort of a reversal up here. Okay, can't stress it enough. Obviously, you do have very positive seasonal tendencies for Aussie and Kiwi. Into the end of April, you do have constructive, kind of trend changes, if you will, and behavior changes in these things. But both are getting into levels where it's going to prove difficult to have runs like they've had recently. Notably, Aussie coming into the 76 floor from last May and June and July before the breakdown. Okay, so what about other Kiwi crosses? Well, you can see this is the Kiwi intraday chart. Let's look at Aussie Kiwi. All right, so Aussie Kiwi, following the slope, it is breaking through. Go to a 4-hour chart. Getting up just ticks away here from the November high, 110.86. Be watching for support at this point at 109.70, although not sure how soon. It actually might be next week or something, but that would be support now. And Aussie Kiwi is 109.70. Okay, this is an uptrend, treating it as such, as an uptrend. Again, this is a sleeping giant. Okay, Aussie Kiwi, you look back at this, you've got the potential for a multi-year head and shoulders pattern, basically 2 years running, and the breakout could be substantial at some point. And I'd be looking again at 109.70 as basically resistance at this point, or sorry, support, former resistance, providing support at this point. Okay, pound Kiwi. That's the 4-hour chart. Hold on. Aussie yen coming into resistance right here, actually. Okay, so pound Kiwi. Really, I don't know, maybe RBNZ comes out and does something, because in order for this pound Kiwi trade to work here, it basically kind of needs to, turn up now. You've come into support. From daily reversal support, basically traded there 3 of the last 4 days at this point. Okay, and that's 209.21. So, in front of RBNZ, with Kiwi, my preferred method of attack is Tim asking, the IDO update was for a bullish break, right? Yeah, so yeah, absolutely it was. So here for IDO, let's look at it real quick. So IDO is matching, probabilities, okay? One month. Pound Kiwi still the top dog, followed by Dollar Mex and Pound Aussie, same as yesterday, so nothing's changed there. What you're looking at here, so you can see there's been 23 matches, okay, and now it's 16. Yesterday was a little different, but now it's 16 of the 23 matches 1 month later are positive by an average of 3%. Okay, so what's 3% on pound Kiwi is 600 pips, basically, right? So that puts you at, 209, right? Puts you actually at 215, puts you back here at the year open. Okay, one, it doesn't mean that it has to happen right away. And doesn't mean that it has to happen, right? It's happened 70% of the time, so that's good, and it's positive, much more skewed positive than negative. In fact, the ratio is now 10.4. That's more than yesterday, so it's actually pretty crazy. And here's what the patterns look like. Okay, so you can see here the most close match pattern, right into the low and then straight up. Okay. The second most close pattern went sideways for a little bit and then lower. Third most match pattern wasn't all that great. It kind of dipped and went higher. Fourth most straight up, good one. Fifth most straight up, good one. So you get the idea, okay? These are the analogs, and these are the overlays and how they match. Okay, so this is the closest match, and I'm interested to see when that period would have happened. That would have been in actually 2015. It would have been October to December, interestingly enough. So anyway, we've combined here the IDO search, which was totally awesome when it showed up, the pound Kiwi, pound Kiwi long as the top IDO search, because this is a chart that I had in mind anyway. Okay, so this obviously is skewed towards short Kiwi. Just kind of for me, I don't have a short Kiwi trade at this exact moment, because if I'm going to short, I want to see a failure, either near 69 or a failure near 68.27. Keep in mind too, IDO is based on closing prices, okay? So you could very well have an instance or a situation where Kiwi on this RB and Z, where Kiwi goes ballistic and has a fake out move to the upside and it ends up being exhaustion, okay? And we end up topping and then it slams lower. It could be that, pound Kiwi spends like a day lower than where it is now and then it turns up hard. All right. So with pound Kiwi, as far as that's how a lot of these, you understand, that's how a lot of news announcements end up being. They end up proving as exhaustion, especially when you have been going one way for a little while. Okay. And in this case, we have been moving higher in Kiwi dollar for a bit. So, be aware of failure at that level. That's what we've got for Kiwi dollar heading into RB and Z. My immediate trade idea on RB and Z would be to go with the upside at this point. If you get a quick tick down into the 6750s, as I noted before, basically former resistance, then you'd be looking at maybe, taking it higher and see if you can get that blow off top. But I think at that point, you're probably looking for the last move, before you get kind of a turn lower again, okay, in Kiwi dollar. And that would be obviously a turn higher in pound Kiwi and everything else. What about ECB? There's a few other things to look at tomorrow. So let's say, I'm going into ECB and I've got euro dollar. Yes, we're at resistance now, but thinking that we trade a little higher to that 1160 region, because of the short-term pattern that we've got going on here. Maybe we get up into 1160, 1165. What else is interesting? Euro pound is actually interesting. Remember, pound made a big reversal last week, right? So we've actually got, a pretty promising low potentially in place here for pound dollar. For whatever reason, pound isn't doing anything in the last few days. On Monday, it had that rip higher in the afternoon. It was kind of strange, and then it turned lower a little bit. And since then, it's really been quiet and sideways. But euro pound, so euro pound, oops, do I not have anything on here? Let's see. I guess I don't have it drawn on here. But euro pound is interesting. Let's go to the weekly chart. Euro pound's coming to an interesting spot, okay? You've got, kind of a host of resistance levels up here. Remember, slope analysis, you got the trend line, right? Identifies the slope. But you've also got parallels, which this one, it's pretty good. It crosses off a bunch of important price levels. This is a weekly chart, goes way back. Okay, so you need not wait until the market gets up into, potentially the highs up here, which could eventually happen. But, we're at resistance now in euro pound. Okay, and generally speaking, bigger picture, of course. So we're at resistance, form of consolidation on the breakdown level, which occurred at the very end of 2015. Go to a daily chart. The daily chart, you are indeed trading higher into resistance as well. Okay, as you can see, this upper parallel ended up being resistance, So there's a good amount of stuff here. And when I zoom in on the short-term chart, you've got a good-looking impulsive decline on the downside and what could end up being an A, B, and maybe a C wave rally here, okay, into a top. So, again, if we're looking at euro heading into tomorrow and maybe finishing off some sort of a leg of a triangle, we could actually get a chance to get short euro pound on that pop, right? So it looking like the best level for resistance on euro pound would probably be about 78.37 or so, being the 61.8 as well. You got highs up there as well. Generally speaking, horizontal levels former support here. Okay. Good highs up there, 78.40 or so, give or take. That's iffy on the slope, but whatever. I think it's something to pay attention to, right? Because coming into long-term resistance and then short-term having decent levels to work with, decent pattern to work with, this could be something to watch for. Watch for failure in euro generally, maybe into 78.40 on euro pound, in conjunction, of course, with 11.65 on euro dollar. Okay. That's euro pound. Okay, so gold need to take a quick look at gold. I'll look at both the CFD and the futures chart. Okay, so this is a 4-hour chart. Let's go to the daily. So gold, again, you had kind of emotional type of feel on that move higher, right? We've had huge volume the last 2 weeks or the last couple up weeks, and once again, the move higher here has ended up providing us with some near-term consolidation. Here's the weekly chart in gold. Okay, as you can see, last week's volume was even greater than the volume we had in the run-up the week of 212. Okay, and again, big volume like this does tend to give way to at least near-term consolidation. Last time it gave way to 2 weeks sideways. This time it's given way to, well, so far 3 days. But the idea again remains the same, and that is, consolidation before higher. So where would that consolidation potentially end? My thinking is that it's probably somewhere on these parallels here, okay? Specifically the gray one that goes through June and goes through October, and that puts you down, actually, down closer to 1220, okay? So, we got down to 1240 this morning. As long as you're holding this close, which is the 211 close, which is 1246.47, there is potential for, I think a bigger move. But as far as a new purchase is concerned, you're looking to, put on new longs in gold for, the bigger move. I would be looking at, again, 1220 to about 1230. Okay. In this the CFD, okay, and you got the high up here. What's that? 1227. Actually, no, sorry, 1232 comes in perfectly. Excuse me, the May high from last year. So this is where I'd be looking at. Okay, so for trading levels for gold, Amir, and anyone else out there, 1220 to 1230 for buys. Be looking to kind of fade out of them as you get up into this parallel, though, which, over the near term is actually closer to 1300. You've got the 1307.50, which is the high from last January. And it's actually the high for all of 2015. Okay, so that could be a pretty decent spot for a much bigger reaction on the downside in terms of gold. All right. Amir asking, was it wrong to short at 1253? Well, yeah, I wouldn't be shorting 1253. That's the middle. You're kind of the middle of nowhere. I'd be a buyer here. Okay, 1220.30. I'd be a seller up at 1307. Right. So those are the two levels: buyer down here, seller up here. In between, do nothing. Is kind of the way to look at it, in my opinion. And Tim with some nice words. Interesting looking. Your thoughts on the whole IDO search analysis. Great way to look at it. Yeah, great knowledge as always. Yeah, absolutely, man. Thanks. It's put us in some pretty good opportunities over I've been looking at IDO for a long time, and you can get some pretty big outsized reward to risk opportunities. No doubt about that as far as IDO is concerned. Yeah, so Amir, I hope that makes sense, man. 1227, 1220 to 1230, basically, for support. and then eventually 1307 kind of as, failure level, although it could be a little higher depending on when you get there, right? Because you can see here, if I scroll out, this parallels actually, if it were to get there, say tomorrow, it's like 1320, right? It's my contention probably that, the gold, the volume that we had last week being the best volume, the most volume that we've had in years, even greater than the run up that we had here into 212, you're probably going to end up with a little more sideways action, a drift lower, say into 1220, 1230, just like dollar yen's going higher up into 114 again. Okay. So, you're saying probably a move to visit support before moving up again. That is that's my thinking. I do think that is the right way to look at it at this point. So that's gold. Let's look at the futures chart for gold. Actually came into the former triangle support right here, didn't we? This is the hourly chart. Let me go to a daily. Crude, gold. Okay. Which one was I looking at as far as gold is concerned? We're going back to the November 2014 low, which is right here. Okay. Right. So here it's the same thing actually. You'd actually see if you get any good intersections on this stuff. So you'd actually get an intersection in, this idea that gold maybe needs to consolidate for a little bit more before getting a bigger bust to the upside, at least before the real big move starts. Again, so you see this one here. Remember, this slope, the one that I'm showing, was the one that we looked at that basically kind of got us bullish in the first place. These are the red lines, the 50 lines, okay? That was resistance, ended up being support here on the 29th, and that was, wrote about that being a subtlety of former resistance being support, and that's really when things took off, okay? Well, what we've got here now is the next 50 line was resistance, broke through it. It was basically then support. Okay, so that intersection actually takes place down here somewhere. It looks like it's in a while, right? But it's, 1220 or so. And this actually fits perfectly with the idea that euro is in a triangle, because if euro pops off tomorrow and dollar Swiss comes into support and gold ends up peaking, a little bit, sets the stage for the next drift lower and all those things, including gold back to 1220, euro back wherever it's going to finish this triangle consolidation into the end of March before April. That's when you get the bigger move. So it actually all kind of tells a story, a very similar one. All right. All right. So I'm going to wrap it up there. Go get ready for some RB and Z action and get this archive, this video, and then see what's going on beforehand with RB and Z. All right. Okay, so remember we are in S&P's fourth wave going on here. it's going to be sideways and herky jerky, okay, up until we probably finish off the move into 2028 to 20, you know, the broad range is probably 2028 to 2040, which is that's in like the index, not the futures, but that is the March low from last year. Okay, so um, could make a March high at the same level. Funny how that stuff works out. All right. Okay, so take care, guys and gals, and good luck. And might have a swing update a little later tonight. I actually have to go do taxes, so I'm going to try to get as much done as possible over the next few hours. But then I'm going to have to go. So though there obviously will be a swing update, it's a matter of when it's going to finally get published tonight. But we'll have something up, of course. Okay, so that's it for now. Again, good luck and have a great rest of your week, everyone. Bye.